following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 5th Cinco de Mayo edition of today's Trader's Edge show. I'm your host, TV Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We're going to go try to figure out what they're communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone at any time. Would love to hear from you. Dial on in 877-927-6648. Of course, internationally, 727-445-1044. So let's go ahead and get things started on this terrific Thursday. Of course, this is the Hotel California, sponsored by Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow trading up 18 points at 17,669. S&P's up a point at 2052. NASDAQ Composite up 2 points at 4727. Russell 2000 back a point, trading out at 1111. The DAX closed up 23 points. The FTSE closed up 5. Gold is trading up $2 right now at $12.76. Silver's up 4 pennies at $17.32. Light sweet crude is up 71 cents. That's trading at $44.48. Leading the charge here to the upside, you've got Regeneron Pharmaceuticals up $16, nearly 5%. Atlas Air Worldwide up 27%. That's up $11. McKesson Corp, distributor to all those good neighbor pharmacies and many others out there in the pharmaceutical business. They're up $8, about 5%. Gartner Inc. up 7%, $6. Martin Marietta up 3%. That's $5. To the downside, Terra Nitrogen down with 363,000 shares. I believe that's pretty big volume for that equity, up nearly 15%, down $18. Enapro Industries down 18%, $11. Tesla 4% or $9. L Brands down about 10%, about $8 out there. Priceline off $6. About 0.5%. So we got a market that is basically really sideways out here. You know, no one is in control today, bulls or bears out here. And we'll try to get a feel for, exactly what's going on. We'll look for some clues out here. See if we can figure out if there is a juggernaut clue as to which way this market wants to continue to trade in. However, since it's such a sideways market out here, my first question that comes in says, "Hi, Steve, can you talk about gold if you have the time?" Well, let's just make the time right now. Let's look at both the bullish case and the potential bearish case, if there even is one as we speak at this moment, or what is required in order for a bearish case to unfold out here. So as we take a look at gold, we're going to look at a couple of different charts out here. We're going to look at least 3 different charts to provide us with some information as to what gold is likely to do. But the first chart we're going to look at, there's the current contract. Here's the June contract for gold. Let's do this. It's easier to just go ahead and turn some of these things off, and then we'll turn them back on again. So now we just have, in essence, a blank chart. I'm going to go ahead and turn the volume up. I really don't need that. It's at this stage of the game out here. Of course, now, why do I have that little circle on my screen? That's never a good sign. Okay, there we go. We're back to operating. So what we can see here, one of the patterns in place for gold, we had gold creating this little rising bottoms line out here. Now, look, I'm not the exact tick of the or the exact low bar, what we'll call February 16th, but close enough. You can see that we had gold trading to the upside, a little rising price channel, to the downside, descending. Well, not even calling it a price channel. We're just simply calling it a trend line. Now, you'll see a yellow rectangle here. The yellow rectangle, whenever you have these wedgies that are forming, when we take a look at a stock chart out here, and this wedgie didn't break out of the pattern right at the apex, it doesn't have to. Oftentimes it does. But when you have these little wedge type patterns, when you see a break, sometimes the first break is a false break, but when you see a break of this, what you can always do is go back in order to get a measured move, what I like to call a measured move. You go ahead and take a look at the base of where that wedge pattern really began, and you can see that to the upside. So from the bullish case with regard to the wedge pattern, the price, and until gold would break down back inside that trend line, you have to assume at least with regard to this chart, things are bullish. So this says that you can easily make the case that gold could get up to 1367.80 or somewhere right around that range. We're not going to hold Stevie to the tick out here. So that's what this chart says as we speak right now. If we take a look at, let's go add some market profiles out here. Let's go see what these communicate to you and I. And I'm going to go ahead and leave those little trend lines out here. And what we can see is that yesterday, a brand new market profile formed on the daily chart. Now, one might say, hey, it doesn't give us a whole lot of information out here. And I would say, not so fast. Because actually, the way that this profile formed, let me do this. Let me try to get rid of those rectangle lines. No, the rectangles. Okay, the trend lines. We can always add those back in here and get rid of this horizontal line. Okay, so now as we take, in fact, let's also get rid of price just for the moment, right? Because when we take a look at these market profiles, we're looking at both the daily and the weekly. The weekly happen to be the green lines, but I want you to focus more on the daily. When you have new market profiles, I don't want to turn off the weekly, but when you have new market profiles appear above the prior profile, that is a bullish sign out here. When you start to see the market profiles appear from down below, just as they did back here in March, that's a sign of a shift in trend. In this case here, we had a market profile that formed both at a higher high and a lower low back around April the 6th. And the only real thing that we could glean from this market profile at this stage here was at that point of control closer to support, said that, price should easily be able to get up to that 1241 level. Now, today's market profile, that formed yesterday, doesn't provide us much with regard. It's kind of an equal distribution, point of control in the center of that box out here. But take a look at where this formed and where price is at. You see, when this market profile formed, price was up above that level out here. And that actually is a very bullish sign out here. Very bullish. Now, does it have to work out this way? No, but you don't see a new market profile typically form below, or when it does form below where price is actually trading, it's actually a bullish sign out there. So from the bullish side of gold, that's what this message is. And then we have that breakout of that wedge pattern. That's what these two charts here are communicating to us. That's what the probability says. Now, let's go take a look at another chart. What else do we know about gold on a daily basis? Well, we know the following, that even on this nice run up to the upside out here, we know that gold has been moving higher and it has been doing it with less relative energy. Is that a problem? Yeah, it's a major problem. Because the way that the markets form tops and bottoms out here, it is a signature pattern, and it is still in play today. However, until gold gets, well, I would have to say below about 1276 right now, we're not that far from it, that bullish outcome that we're looking at is still in play. When we come back, we'll take a look at this chart. We'll finish it off. We'll go see what those large commercial traders are saying, and we'll go look at a few other things as well. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off about 4. S&P is down 2 points. So we're taking a look at gold, doing both the bullish side and the bearish side out here. And we're looking at this chart here where we've noticed that gold has been moving higher, doing it with less relative strength out there. We say that that is a problem because you and I know these topping patterns and bottoming patterns inside of anything they would look at for any time frame, tops and bottoms, tend to form when you see this pattern. Look, the bottom inside of gold that formed back on December 3rd, when things were moving lower out there, it formed the exact opposite pattern that you and I are looking at as we speak right now. Now, there has not been a bearish reversal signal that has actually formed inside of gold. It's potential that we could call this a bear separating line right here on May the 3rd. But this red line that is on my chart, it's not a moving average, it's a Stevie line. It's an important line out here. And as we take a look at it, when price is above this red line, the message is that there's enough energy for price to continue moving higher. It's just simply volume or not. Doesn't really matter out here. When price gets below this level, just as it did right back here on March the 11th, March the 9th was actually, I believe, when I went ahead and took a short position inside of gold. By the way, I was stopped out, or my clients were stopped out as well on this day right here, April 29th. Small loss, manageable loss for sure. And we could see that price had dropped back below this level out here. And that looked like that really was where the turn was going to occur, right? We had this price moving higher, doing with less relative strength out there. We get back below Stevie's red line out there, a red line that you pay attention to. And all we did was we went ahead and said, hey, what are these guys doing out here? What is this two groups of traders doing? Large commercial traders, that's the bottom portion out here. And what they have been doing as a percentage of open interest, they have been building to very large net short interest. Now, these guys here have got the money that only you and I and everyone else, I mean, we're talking big money out here that we wish that we had. They take time to build their position. They are early. They are often early. Once it gets up to certain levels, that's where you really start to look for these other patterns that are forming, topping-ish type patterns inside whatever market it is that you're trading out here. In this case, we're taking a look at gold. And they are early because they're building a position, but they are never wrong. And so it's really just a matter of when. It's not a matter of if. And the question is, can we be smart enough to identify the pattern inside of gold that triggers everything to the downside? Now, the question that came in was, hey, you've got the U.S. dollar index trading up 540 ticks out here or plus. And you and I, we called the bottom here inside of the U.S. dollar, right? We just simply knew what to be paying attention to, which was the bottom of that consolidation pattern. And we said, hey, not until the bulls or the cavalry show up will we know whether or not this is a consolidation bottom. And, of course, they did show up. They showed up a couple of days ago. They created a nice little hammer candle right at a level of support. It is why each of us understand our Japanese candlesticks out there. Kompai to these Japanese candlesticks. And then we had some follow through as well. The next day we've seen some follow through right here. You know, we can draw a downtrending line inside the tops inside the U.S. dollar index, and it's there. But the U.S. dollar index is on its way to 95.21. The question assumes here that, hey, if the U.S. dollar index is trading up and gold is trading up, and we know that these things don't always correlate, you got to trade, in my opinion, is, focus on what it is that you're trading. Don't get be aware of the correlations, but don't necessarily get entirely hung up on that because, things, hey, look, even one of the best correlations out there, which is light sweet crude, which is up 58 cents. When I say one of the best things out there, because, over the course of the last 3 months, we're looking at about a 70 to 75% correlation out here with regard to if it closes higher, the S&P closes higher, or vice versa to the downside out here. But we can't completely, let that control our trade. In fact, if we take a look at light sweet crude right now, let's just do that. So with regard to gold, that's where it's at. The messages at this stage here show top forming, big money, expecting the next giant move to be to the downside. How far down I don't know. I can just tell you that they continue to build. And the question would be, when gold was trading up as high as it was today, and who was selling into it, it is those guys. It is those large commercial traders that are there and willing to sell to all of the folks. And you start hearing the stuff on it came out of yesterday's conference inside wherever they were holding that conference at, and Drunken Miller. And Drunken Miller's saying, hey, gold is his largest currency hedge. Didn't say he's all in on gold out here. And he probably bought back down towards those December lows. Who knows where it is? I think he had bought into it before and was probably, my recollection, you probably go back and find it, months ago, and was, his sphincter muscle had to be tightening because he didn't say, hey, I'm in the most profitable position out there, but everybody just makes these assumptions out here. In any event, that's my take on gold, at least with regard to what the tools that we use are communicating to. And so hopefully, Michael, that assists you. If you're asking me specifically which way is this thing going to go, well, right now the message is everything says that it can go a bit higher out here. Now, silver, if I were to take a look at that same chart, let me see if I can do this here. Oh, I know I can. I can do basically anything. That's the beautiful thing. Each of us can do anything that we want. We just have to set our minds to it. I'm going to go ahead and put up the continuous contract for silver here. I just have to search and grab the symbol out here and attach it. We're going to see here in silver, we actually have a little bit of a different message. Remember that red line on Stevie's chart? Not in the sand, but that red line in the chart. Well, silver, guess what silver has done? Silver is back below that red line. It dropped back below it yesterday. Now, it's got a brand new market profile that's out here. It's also trading below the top of that box. This says that silver's on its way to 1718, maybe 1693, and that's what you want to be watching. But right now, silver has given us a topping-ish message. Now, it's done that twofold. One, you've got this candle here referred to as a dark cloud cover, but the reality is that is also a key reversal session up at the highs out there. And so that can be a bearish pattern. So it has given you a bearish candlestick signal. It has now gotten below a line that it needs to be above, which is 1751. That's the level to be watching. And this is starting to say that there are cracks in its ice out there. So that's the take on gold and silver as we speak right now. Another question that came in. Well, we'll get to that. We got about a minute here. Let's actually go back and focus on the markets and see what it is that we can glean out here with regard to clues in a flattish type market. And we'll take a look at volume here in a little bit, but I want to take a look at the advanced decline oscillators, but more specifically, what I want to look at is the VIX index. In fact, let's switch over and take a look at the VIX index right now. As we take a look at it, and we explode this up on the screen here, the key level, yesterday you and I were watching, we said the key level, I don't remember exactly what it was yesterday, it was above 15. But that key level today is 1542. Now, at 1542, as long as the VIX index, the cash index, trades above it, not trades above it, closes above it, that says that more likely than not, you're to see a move up to 1727. It's not that it can't move higher, but that would become its next targeted move out here, 1727. So the number to be watching today is 1542. When the VIX is above the 50-day exponential moving average, the only thing the S&P 500 can do is move sideways to lower. And lower is really the higher probability with regard to what the S&P wants to do. Steve Rhodes with TFNN. We've got the Dow down just a few points, the S&P down about 4. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So during one of those segments, first or second, we were talking about correlations. We mentioned correlations, or I discussed correlations, ES Mini and light sweet crude. So we would look to, so we know the VIX is one of the levels that we pay attention to, especially when it's close to that 50-day exponential moving average out there. So we've covered that. As we take a look at that's a 30-minute chart that we're looking at. The top portion of my chart out here, the ES Mini, the bottom portion, the current contract for light sweet crude. And you're going to see some horizontal lines on here. In the box, that you're looking at over in the right-hand panel, you'll see things labeled as top W, CTRW, BOTW. That happens to W stands for weekly, the D for daily, 30 for a 30-minute chart, and then those are the TAS market profiles out here. So we can take a look at each of those profiles for each of these instruments to get a feel as to what the market is doing. And when we take a look at the ES Mini right now, it's bumping right up against the center of the weekly box, 2039. Now, 2039 should be a level of support out here. If I pull this back a little further, we can see, this is the level yesterday at 2 o'clock that we were watching. Well, between 1 and 2, we were watching this out here yesterday. That level ended up holding a support. Market boinged, if you can call that, up into the time of about 4:30 this morning, right into where? Right into the 2060 level. And what's at 2060? Well, 2060 happens to be the bottom of the daily box out here. So we know that was old support. It has failed. It is now new resistance. And that is where a real resistance level is in the ES Mini. Not until price is able to clear that level can this market run higher. The ES Mini is what I'm referring to. Now, when we take a look at what, in fact, Lightspeed Crude is doing, it also has a point of control, but this is the daily that we're looking at, that little dashed blue line, and that was priced at 44.64. And this is held. Remember, here was resistance back here at about 9:30 yesterday. Yet 9:30 in the morning, price went ahead and moved lower, came up here and tested this level. And it wasn't until about 3 o'clock this morning when price broke through that and continued to move higher. Now price is back below this area, and it stands to reason that we would see Lightspeed Crude head down towards or tag the 42.93 level. What should that do? Well, if this trades lower, just simply based on the correlation, you would anticipate that the markets would close lower today as well. So that's a piece of information to be watching out here. But right now, the ES Mini, it's got a mind of its own. Remember, these are the correlations. But now what we know is, regardless of those correlations, what is the ES Mini going to do at a level that is held as support for quite some time? If I take a look at what's going on a 10-minute chart out here, just to get to, this is a 30-minute that we're looking at, but let me switch down here to a 10-minute chart. Let me just hit my update button out here. And so we've got no reason. Well, let's go see. Let's actually do our wave counts to the downside out here, see where we're at. And we're in wave number 7. Now, price has gotten down. It's made a 100% move of a move. What do I mean by that? A 10-minute chart, it got back to about the 2 o'clock in the afternoon time frame yesterday. That's a 100% move. We know on the weekly chart, right, that it's right up against a potential level of support out here. And if in the next 7 minutes we don't see a lower low out here, if you wanted to take the long trade, it would be pretty easy. Your stop would be right below the low of the last session out here. I would tell you what that would be if I can get up on my screen. 2039.75. Your stop would be at 2039.50. But we won't know whether that, in fact, would be the stop for another 6 minutes or so out here. But there's your 10-minute chart. Is there any other bottoming pattern out here inside the 10-minute chart? No. There's no topping pattern like we looked at on the 10-minute chart out here at 4:50 this morning. So at 4:50 this morning, what we had was the ES Mini running right into a level of resistance using its market profiles. Price was moving higher, doing it with less relative weakness, giving you a bearish reversal signal. And then price started getting below Stevie's red line out there, and that was on the 10-minute chart. Okay, so with regard to the markets, what are they doing? Well, geez, they're headed a bit lower out here. It is the sellers that are the ones that are in control. All we have to do is look at the advanced decline oscillators. That's the bottom panel of the screen that you're looking at here. New York Stock Exchange is on the left side. The NASDAQ Composite is next to that to the right, and then further to the right is the Dow. The very right panel happens to be the S&P and the VIX index out here. So it is sellers that are in control. We know that the Dow has broken through that hammer candle. Let's go back and take a look at this chart here for the Dow. 17,627 is what it's trading at. And as we take a look at the Dow, more likely than not, now the candle we're looking at is April 29th. Once price closed below that, which it did yesterday by just a tad out there, that says that if you're long, you're wrong. And that says that we ought to see an A to B equals C to the downside. Now, the 1-to-1 price projection gets us into about 17,397. the 1.272 into the 17,256, and our 0.382 retracement of our entire move is 17,149. Not much damage that has been done thus far inside of the Dow. It is not yet oversold enough. And closing below at a hammer candle would suggest to you and I that it should hit one of those levels, 17,396, 17,256, or 17,149. Let's take a look at some things here that are moving in the upside to the market, to the upside and to the downside. Let's look at downside action first. Let's look at Terra Nitrogen, TNH. This is a daily chart we're looking at. That is a nasty looking candle. Let's go ahead and add our volume now that we're looking at some individual stocks out here. Big volume for this equity, 379,000 shares today. Now, where is Terra Nitrogen headed to with that type of candle out here with that kind of volume? There are no volume areas of support that you and I can see to the downside. This would suggest that price is going to go ahead down and into this swing point level from January 20th, and which is down around the 84.12 to the 94.39 level. May, in fact, take that area out. Things do not look good for ticker symbol TNH. If we take a look at the next equity dollar-wise, the downside, Amazon has jumped into the picture now. Amazon has, you know what? I don't even know. What do I even mean? Amazon, what the heck kind of language is that? Here's what Amazon is doing. It's pulling back today. The volume inside that is 2.8 million shares. We know that Amazon ran into resistance, that little wall that was formed back on January 4th when it had gapped down with 9.3 million shares. Now, look, it made a nice move higher on May the 2nd out here, but it only did it with 6.5 million shares. So we've got, in essence, a test of the swing point from December 29th. That's got 5.7 million shares, but we know volume is light out there. At this stage, what does this mean? This means that more likely than not, we'll turn on some market profiles, but just simply trend lines that we know have held, more likely than not, what Amazon is going to do is going to make its way back down towards this trend line. Now, tomorrow, something could happen overnight inside the markets. Amazon could gap down. It could create an island top out there, and that would not be good if you were long Amazon. Of course, the first level of support that has to be broken is going to be that trend line. If I take a look at market profiles out here, both daily and weekly, this says that it ought to find support and good support at about 651.95. So that's another area to watch inside of ticker symbol AMZN. Let's look at Tesla, Priceline, Regeneron Pharmaceuticals, McKesson. We get back from this break. Steve Rhodes with TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. If we go back to that 10-minute chart out here for the ES Mini, we can see that there was a slightly lower low that formed as we came into 140. So that says that the new low that has to be watched is 2039.50. We know that price came down. It tested that weekly point of control. So one of the TAS numbers out there in the 2040 level. We'll have to see now in the next 8 minutes whether or not this can form some type of bullish reversal signal. It's off to a good start. We're only 2 minutes into this. A level of resistance. So if you were trading intraday, the level of resistance that you would be looking for potentially to jettison the trade, or to say, hey, if you can get above this, it'll move to a higher level. The area that you'd want to be watching is 2048. It's about 6 points above where it's trading right now. If, in fact, this is a seventh wave to the downside and price can get above that 2048 level, then you're looking at about 2052 as the next price target. That's utilizing a 10-minute system for the ES Mini out here. Now, let's go take a look at, and you can see light sweet crude has actually come back to life out here as well. So we can see these markets, moving in unison out here. But again, stay focused on the market that you are trading, whatever that is, and certainly stay inside that time frame. Let's look at a couple of things that are continuing to move to the downside. How about Tesla out here? TSLA down 5%, down about $11 out here. Let's go take a look at the volume behind the move, and let's go see what we can figure out with regard to where Tesla is headed to next. So we know that Tesla had a swing point back on March 24th. That swing had 4.9 million shares. Today, it has done 8.6 million shares. So it's moving below a swing point. That says you can go down to the next swing point. Well, if that's the case inside Tesla, that would say you go all the way back down to the bottom. The bottom would be the February 9th area, somewhere in the 148 or the 141 to 159 range. What else do we know about Tesla out here? Well, it has broken through its daily and its weekly TAS market profile. It actually did that yesterday. You've got continued moves to the downside out here. So that says, other than a retracement level inside of Tesla, which, by the way, it's moving through the 0.382 retracement level right now without any problem, wide-ranging bar. So this says at a minimum, Tesla ought to head to 190.06. But again, without any kind of swing, any kind of volume anywhere to stop this descent, you'd have to say 141 really becomes the price objective for Tesla. That's what traders are doing with the stock. The most fundamental aspect about fundamental analysis, right? Technical analysis is the most fundamental aspect with regard to technical analysis. Why? Because it tells you what traders are doing. It doesn't really give a darn what the marketing message from the CEO really says out there. Let's take a look at a couple other things here. Moving to the downside, LB. L Brands gapping down, big volume behind that move, 11.5 million shares. This is trading below a previous swing from all the way back down on August 24th. How about that? So there was 3.3 million shares there. It's busted through that area. There are several A to B equals CDs out here. I think we need to put this on a weekly chart just to try to assess where price is likely headed to, right? You break through a swing point, you do it with volume. It's breaking through both daily and weekly. Said you can get down to the next swing point out here. So that says the price target becomes 67.16 all the way down to about 50.78. Ticker symbol there is LB. It is also shedding weight like Stevie-san has done here, although the shedding of the weight is kind of getting them not losing a pound a day anymore. It's more like a half a pound a day, if that. Frustrating. And I'm doing all the same things, but building lots of muscle. All right, let's go take a look at some things that are moving to the upside out here. Regeneron Pharmaceuticals, REGN. That's up 4%. That's up $15. What is it doing? Well, this is still the weekly chart that we have up on our screen here. As you can see from a weekly chart, not doing a whole heck of a lot. But let's look at the daily. The daily chart says, hey, not doing a whole heck of a lot either. We know that the Regeneron had its most recent swing point back here on the trading day of March 17th, 1.5 million shares. As price got down there yesterday, lighter volume, 1 million shares. Today, you're getting a rejection of that swing point. Price inside Regeneron Pharmaceuticals can easily make its way up to 396 to the 391 level. We got McKesson Corp. MCK is the ticker symbol. That's up with 2.7 million shares. This is trying to take out a B point of an A to B equals CD to the upside. It has the volume, or it looks like it does. That's from the trading day of April 22nd. 1.5 million shares there. You've done 2.7, but it's not been able to take it out. It has even going against this little downdraft here that has 3 million shares from April 28th out there. So looks like McKesson stuck in a bit of a trading range. That range being between about the 179 level down to, at this stage here, yesterday's low, that low being 164.39. Also moving to the upside out here, we've got Atlas Air Worldwide, AAWW. What is behind this? Just an earnings report out here. So as we take a look at Atlas Air Worldwide, nice volume to the upside. One heck of a move volume-wise, 3.4 million shares. Was that just volume, or was there something else going on out here? No, just their earnings release. So where is this thing trying to head to? Well, all in one day, it traded all the way back up to its most previous swing point, which was back on June 26th out here. But it has traded well off of that high, which was in a 58.81 level. It actually got up to a high today of 57.77, trading right now at 48.62. I don't know what to make of this out here, so we won't make anything out of Atlas Air Worldwide. What else do we want to take a look at? Did we look at McKesson? Did we take a look at McKesson? Yeah, we did. We just took a look at McKesson. I'm sorry, I can't walk, chew gum, and think at the same time out here. Okay, so 2 minutes to go in this segment, and with this flattish type market out here, very flat market, what do we want to look at? We know the U.S. dollar index is going to the moon, Alice. No question about that. Maybe all the way back to the top of its trading range. Couldn't bust out the lows. Let's take a look at some individual gold stocks. Why don't we do that? Let's go see what they're doing. Rand Gold, that's the one that gave us that island reversal yesterday. That spells big trouble out there for you, those of you that are inside of Rand Gold. Rand Gold headed back to the 80.46 level. That happens to be the bottom of its weekly market profile. And if it doesn't, which is 80.92, quite frankly, and if it doesn't hold 80.92, then you're looking at coming back to probably 74.36. And if it doesn't hold 74.36, there are some big problems going on inside of Rand Gold. But it's got an island top. Those island tops have previously always sent prices back to the lows out there. If we take a look at Gold Corp, that's trading out at 1855. This stock chart looks a lot better than Rand Gold as we speak right now. This thing is trading right down into its TAS market profile low. It's daily. The level out there that you want to see it hold if you are inside this equity is 1849. If it fails to hold that, meaning closes below, you're looking at a run down to about the 1650 level as the next level out there, and that is in GG. That is Gold Corp out there. Right now we got the Dow off 18, S&P is off 3, NASDAQ Composite is off 11. I'm doing the best I can. Maybe I should. I'm not a good joke teller, but I can tell you many things, but I have heard a really good joke. I got to figure out how to clean that one up and practice it and then tell it to you. In the meantime, there's no joke out here. We just have a sideways market. Dow's off 16. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. If we take a look at charts here to keep an eye on, this happens to be a 30-minute chart, but you can put it on a different time frame out here. You can see a nice little trend line that is formed. This is coming off of the highs here from about 11:30 in the morning back on April 28th. And you can see, and this was a line that you and I drew out here a couple of days ago. I believe, because I haven't touched it, and we can see how this nice little declining tops level. In fact, this morning, early in the morning, when price had made that move into that 5 o'clock time frame, price ran into both the trend line, that descending trend line, as well as that TAS market profile, the bottom of that daily box, 2059. So at this stage here, clear downtrend. Clearly lower highs, clearly lower lows as we speak right now, and prices up against a pretty significant level of support. So if that 2040 level, 2039 level fails, where will price head from here? It should head down to what's that 20? Come on, pop up on my screen. There we go. 2006. So about 34 points to the downside is what you would be looking for. Likewise, if it can break back above the 2060 level, what you'll see here is you'll see price break above a trend line, and that says that price can easily move up to 2082 to the 2097 area out there. Terry, I don't know why your sound isn't good out here. It's probably me. It's probably my voice out here, but we'll make sure the guys in the control room are tuning things up for our man, our polar bear, David White. Out here, if we take a look at the NASDAQ, the NQ, it's got a similar trend line, right? And we can see that price didn't get all the way back up to that trend line earlier. Nonetheless, you've got that trend line to be paying attention to. There aren't any market profiles here for us to be focused on with regard to daily and weekly. The NQ itself, it's about to form this little pattern out here where a couple of Stevie's indicators run together. They do a little kissing thing out here. You can actually hear the smooch going on right now. And the problem is you got to really watch this bottom panel. As this little smooch is going on out here, if price really continues heading lower in a big way, at a minimum, you should anticipate price moving lower for at least a couple of days. It can't be a pause, or headed much, much lower. How will we know which will occur out here? Well, we'll just simply watch different patterns that exist inside the marketplace. But at this stage here, it's only the NQ that has that pattern out here. But that pattern suggests lower prices ahead inside of the NQ. And the NQ has led things lower, right? The NQ will be the pattern, it will be the indice, it will be the equity futures contract that will go ahead and start things to the upside. But it is not the NQ that you want to be long on a bounce if you're going to go ahead and play it. And we will see another bounce, by the way. We didn't just see the high of the highs or anything like that out here. But I would suggest you would look elsewhere. I would suggest you would look at the Dow or the S&P 500 versus the NQ. But we're not there just yet. We don't have any kind of signs whatsoever as we speak. And what else? Oh, Whole Foods Market. Robert in Chicago. I believe it's Robert in Chicago that calls periodically. He was the one that let us know that Whole Foods Market was coming out with an earnings report. I don't really know what their earnings report said. We know that what we couldn't identify, I couldn't identify, was what Whole Foods was doing, how the market would respond. The reason is because the most recent swing point was February 8th. It had volume of 7.7 million shares, and as price was moving down into that level, it was with volume. 8.5 million shares 2 days ago. Yesterday, 12 million shares. Nonetheless, it has bounced. It's got a brand new daily profile that says at resistance, which is what it has traded up into thus far today. 30.08 is a key level that it needs to get above in order to head to 30.75. Folks, it's been terrific being here on this very quiet day, but stay tuned. Our polar bear is going to be up next. David White, the Tom O'Brien Show, and Andy Heck to take it on home. Have a terrific Thursday. We'll see you on Freaky Friday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.